It is Friday morning. The stock market's been open for 30 minutes, and it looks like we're going to put together a positive week for stocks. And we have stocks going higher by a little bit overall, but some stocks are really taking off. There was a positive report out of TSM, the biggest foundry in the world, saying that the volumes of chips that are being produced, it's growing and there's no disruption due to this conflict in Iran. So the semiconductor space is just having a very good morning, and plenty of goodness to go around the semiconductor space. And the semiconductor equipment and material space is doing well, so that's looking good. It's catching on to the memory. Guess a couple of storage companies in there. So this space is really the hottest space in the category. So congratulations to those. Now, software, this is like it was run over by a truck 6 months ago. And unfortunately, a group of cyclists followed and ran it over. And it's just been run over multiple times. This space is so small. It's crazy how harsh the market is treating these stocks. Intuit down 3.7, and Intuit just been hammered this week, just beaten up. So the software space, the big story there is AI, specifically agentic AI, which is you're creating agents which are like digital robots that can do work. And if it's a digital robot that's doing the work, and I've been working with these things, trying to set them up, I've been doing new stuff with my agents. And I could tell you that I'm a believer. Agentic AI is going to change the software business. It's just going to change it dramatically because the way we work is going to change. And I'm already changing how I run this YouTube channel. I'm changing how I run my other business. And little by little, I keep passing on the work that I was doing before over to this agent. And it's a pretty good situation for employers, pretty good situation for me. This agent doesn't draw a salary. I'm not paying it an hourly wage, no benefits involved. It just consumes tokens, either if I'm plugged into Anthropic or if I'm plugged into Gemini, I'm paying for that type of consumption, and it's not that high compared to the value I'm getting. Businesses are going to flourish in the agentic AI era, and what that's going to do, it's going to reduce the number of licenses that are required, and just a lot of things are going to impact the software space. And the market was right about this, and I don't think it's going to happen overnight. I think ServiceNow, Intuit, Salesforce, even Palantir is beginning to get hit. These companies are going to maintain their revenues for a while. Companies are not going to change over, quickly. But in 5 years, these businesses are going to be different. In 10 years, it'll be absolutely, completely different. So the market's pretty much trading on that expectation, that thesis. And man, I wish I would have saw it earlier. So I would have gotten myself out of software stocks, but I am where I am. I'm going to take the good with the bad. And my stocks, Google's been on the rise. Meta's been mounting a nice little rally, but the star of my portfolio this week has been Amazon, which has really made a very good move this week. We've got industrials under a little bit of pressure. Financials are down. Not sure. Do you happen to know what's going on in financials? What's causing them to go down today?
Oh, that's a good question. I haven't heard anything specifically this morning.
Yeah, me either. I know the inflation came in a little hot, but that's the only thing I heard. And I know that. What's your feeling on interest rates? Do you think they're going to reduce interest rates, the Federal Reserve this year, or is hold them, or even go up a little bit?
I think they're going to stay pretty much flat this year with the Fed funds rate, unless we get into a recession where they're kind of forced to lower them. But I think the economy is doing well enough at this point that I don't really see them making any moves this year.
I agree with you.
And I think the market watch tool is pretty much in line with that thinking as well.
And even if they moved interest rates by 0.25%, right? 25
Yeah.
basis points. For me, it doesn't make a difference. It's like, okay, guys, like it's just a very subtle difference in discount rates and so forth. So I think maybe the financial stocks are maybe just not exciting right now. Consumer staples, Costco is giving up some of their stock price, and aerospace and defense, whoa, it's down quite a bit. Materials are mounting a rally, real estate's doing well, and our friends over in energy are down, but they're doing well for the year. Let's take a look at the week. So the week in review, as mentioned, Amazon's been flourishing. We'll take a look at Amazon and see what's going on over there. Why is this stock beginning to rise? Is it going to continue to rise? Is this going to be something that is going to be priced much higher in 12 months? Well, let's take a look at it. Other stocks, of course, the semiconductor space, incredible. Google's had a very good week. Meta's had a good week. They released a new AI model, and they're trying to compete and be more at parity with Gemini and OpenAI and Anthropic. I don't know that they're trying to like be better than those particular AI models, but I think they're trying to carve out their niche. Like, hey, we're going to be really good in this space or that space, and we'll see how it goes. I think it's going to work out. It's a pretty smart team. They've got really good, talented people, and they have the user base to really introduce their AI models to a very big population. So we'll see how that goes. Looks like Caterpillar had a nice rise. GEV had a nice rise. Of course, the semiconductor equipment materials was very good. And those are the big hits there. So right now we are trading just overall. The S&P is slightly in the green. NASDAQ's up in the green. The Dow is a little bit in the red. And the VIX is under 20. What is going on with the VIX? Any comments on the VIX, Daryl?
Yeah, I saw that it was down around 20 and it's below 20 this morning. That's good news. I think you mentioned inflation came in hot. I think that was only for the headline. The core number, which the Fed tends to look at, was in line, actually 0.1% better than I think they were expecting. So the core number came in pretty good. The headline number was a bit high.
Yeah.
But it came in line with expectations.
Agreed. The headline number means something to me. And I know the Fed has its reasons to keep its methodology consistent. Got it. But if the consumer is paying, I know in California, well over $6 per gallon to fuel up their vehicle, it's going to make a big difference. It's already making a big difference. You're seeing a lot more chatter around EVs, change in behavior, like traffic patterns are changing. I live in the Los Angeles area. Everybody drives here. So it really racks up the cost if you're paying a lot for gasoline. So I get the Fed doesn't do that, but I think it affects the consumer. And if the consumer doesn't have as much money to spend, it's going to affect everything else. So it's going to affect it from an economic activity perspective. So I'll just process that and see what's going on. All right. So The VIX is below 20, and below 20 means that's not a troubling figure, right? We're okay. Does that correct?
I'd like to see it down below 17, but 20 is still cautionary.
Okay. All right. Well, we were quite a bit higher not too long ago.
Yeah,
We
we
were
were
up
quite a bit higher. Yep.
we were up here. Maybe my frame of reference has been changed because hey, we were way up here before and now we're way down. It seems like okay, well, we de-escalated that situation. Glad we're going lower. And if this war goes away, I think this VIX is going to continue to drop. I think a lot of the fear is going to leave the market. The expectation that oil prices will come down, so long as that kind of gets put to rest. Like, okay, no more drone strikes and no more missile strikes. None of that. Let's just kind of let things settle down and move forward. All right, so that's what's going on there. We've got a good audience. Hey, everybody, thanks for joining. We've got a live stream. We're going to talk about the market. We're going to answer questions about the market. We're going to answer questions on the market and review stocks, analyze them. And you've got two perspectives on this live stream. My co-host is going to look at the technicals on a stock, see how the stock is setting up. He's got a lot of great information, knowledge, perspective, wisdom to share with you. And I will handle fundamentals, looking at a business and trying to see, is that business set up to do well from an economic perspective? How are their top line revenues look? Their profits, their free cash flow generation. How are they priced? If we value the expectation of future cash flows for that stock, we value the expectation of profits for that company, how would it value? And is it priced at a discount or at a premium? That's my job. So you get those two perspectives. And I hope you find the analysis useful in your investing in stocks. It's never investing advice that we provide. We just provide our research, our perspective, and hopefully it's interesting to you. And we're going to get started on some stocks. We're going to get started with a big one that everybody knows about. Let's head over to Amazon and see what's going on. I think they're still headquartered up in Seattle. They do have a second headquarters, I think, in Virginia. And but their original headquarters is up in Seattle. These guys are moving higher today, up 2%. And over the 1 year, this is up 25%. Now, a lot of stocks are going to look fantastic now because a year ago, we were just dealing with this awful sell-off due to the tariff situation. And the tariff situation was what it was going to dramatically change the economy, and the president pumped the brakes on the whole tariff situation. So then stocks rallied higher. So temporarily, when you look at Amazon specifically, it's going to look pretty good. But if you look at the 5-year, it tells us that the stock has not kept up with its peers, being those big mega caps. This one's up 41%. But if I showed you Google or Nvidia especially, those stocks are up, multiples on the stock price, up 200%, and higher. So these guys have not been a superb investment if you measure the stock price. Now, let's take a look at a couple of the fundamentals that I like to look at, and then we're going to get into a valuation. So the market cap, 2.55 trillion. That's pretty high. Forward P is 30. That is a little elevated. And analysts think it's a strong buy with a discount of 17.6. Now, Amazon is a humongous, massive company, $717 billion of revenue. It's the biggest revenue company in the United States. And its revenue is growing by 12%. So you're the biggest company, gigantic, and you're growing by 12%. And just do the math with me. 717 times 12%. We're going to see about 83 billion dollars added to that top line in a year. That magnitude of growth is a big company on its own. So Amazon's almost adding a whole company to the top line every year. And it's to me it's a key factor in Amazon is this growth. It's very, very impressive. If they were tiny, if there was 7 billion and they were growing by 12%, it'd be like, it's not floating my boat because they're small. When you're small, you should be growing at 50 if your product's great. But these guys, they have a lot of things working for them. Their margins are good. They're not the best margins you're going to see. Gross margins of 50% on a diversified business. Of course, we know their e-commerce business. I mean, you probably, if you haven't ordered something from Amazon today, you might order it by the day, by the end of the day. Speaking for myself, geez, we got a couple packages arriving to our home each week, and they do have profit. Amazon, a couple of the positive notes that you don't see in the financials that I wanted to cite. They're in on the AI economy. They're going to be a full participant in AI because they have a hyperscaler business. Hyperscaler meaning Amazon has a cloud infrastructure business where they host the biggest workloads that companies take to them. And a workload being you're a software company and you need to find the servers and all that infrastructure, you go to Amazon, you go to AWS, or it could be Anthropic running on AWS's infrastructure. It could be OpenAI running on AWS infrastructure. All those things are what run on AWS. So as the AI economy continues to thrive, because Anthropic and OpenAI, they're $1 trillion valuations at this point. That's incredible. And those valuations are for private companies. I know Anthropic has a revenue run rate of 30 billion and they're growing really fast. They're bigger now than OpenAI, which has a run rate of 26 billion, I believe. And those businesses really didn't exist 5 years ago. Now they're that big and they're going to be much bigger. They're in essence going to be the kind of like the AI service that a lot of companies are going to use, and they're going to be paying for these tokens. Yours truly, I've been paying Anthropic for my tokens. I've been paying Gemini for my tokens. It's not a lot of money, but I'm just one guy. I don't know. I'm spending about $50 a month. And if everybody spent $50 a month on Amazon, or excuse me, Anthropic, boy, they're going to be humongous. So Amazon's in on the AI economy. They have, I think about an 18% ownership of Anthropic, FYI. And they have the robotaxi business, which is AI, physical AI. It's not a big business. It's the Zoox business. So it's nice that they have it. All right. So let's take a look at the forecast. What's expected? What's Amazon going to do going forward? Let's take a look. So the revenue is going to keep growing, and they will be $1 trillion revenue per year, $1 trillion in 2028. And that is a couple years away. So impressed by this growth. And a lot of this growth is happening in the data center in the AWS business, which has the higher margins, which shows that their profitability is expanding. Now, one of the things that is happening over at Amazon is they're spending a lot of capital building out these data centers, so it's drying up their free cash flow. So you got in for me in the way that I invest in Amazon, I need to look past that. I need to project the free cash flows, knowing that they're not going to spend at these levels forever. They just need to build it out so they can get market share, they can get these workloads, and then prosper by having all these businesses at AWS. Genius move. Keep doing that. All right, so let me show my, or actually, let me kick it over to Daryl, and then we'll come back and I'll show you my evaluation on Amazon. Take it away, Daryl.
Yeah, I saw this photo on X at one time. Somebody pulled it together for Amazon of all the businesses they own. It's just absolutely amazing.
Yeah, I forgot they
So,
own Twitch. That's a real popular.
yeah, they own a studio,
They got the
an
streaming
IMDb,
business.
which I use about every other day, Kindle Direct, and Amazon Publishing, pharmacy business, Amazon Fresh, Whole Foods.
Oh
I have,
yeah, they do groceries.
yeah, I have Ring cameras all around my house. AWS, I'm a user of. It's just amazing all the different businesses that they have. It's just quite a lengthy list. So whenever we talk about Amazon, I like to take a big picture view. This is a 20-year trend channel beginning in 2006. And we've connected as many of these low points on the chart as we could, made a copy, connected as many of the high points as we could, and then made a dotted line, put it in the middle just to see where the middle of the channel is. I look at the slope of this line, which is over 3 years. So it's about 33% per year, 108.5% over 3 years. It's a little difficult to just do 1 year, at least on some charts. So I usually typically use 3 years, but I'm just connected to the bottom side of the trend line on one side and the top on the other side to get me the slope of that line. So you can see that they pretty much over a 20-year time frame have traded within this channel. 2018 they traded outside of it, 2019 a little bit, 2020 and 2021, and then 2022 came, which was a cyclical bear market, and they traded all the way down to the bottom of that channel. I'm trying to think of when I first bought into Amazon. I'll have to go look. We're trading right at the middle of that channel, came down and the bottom of that channel once more, but we are starting to make our way back up, and they had a really good week, as Victor pointed out. So anytime you're worried about these little tiny price drops, take a screenshot of this screen and pull it up, because that's what Amazon does over the long term. Then we can look at a 5-year daily channel. They did drop out of that channel. They haven't managed to get back within that channel. They're facing a little bit of resistance at this price line. I don't remember how far that goes back, but they had the tariff. Yeah, the tariff lows were 169. We spent about a month underneath this particular auto support resistance and have been making our way back to the upside. So this big drop, let me go just to the 1 year. So Amazon. Oh, there it is. Okay, so we had this big drop here in February. Let's see. This big drop was related to their CapEx expenditures expecting to, be 200 billion with a B dollars in 2026. And what's driven this particular rise this week is Andrew Jassie's uh, stockholder newsletter that he puts out. He talked about if they spun off their semiconductor business, because they have their own chips, if they spun that off, they have a $20 billion run rate and expected to go to $50 billion. So if they spun that off and stand alone, that would be a business on its own, a huge business. That put a lot of relief in investors' minds. They're spending 200 billion and getting a business that could have a 20 to 50 billion dollar run rate per year. So people are pretty excited about that, and it's driving the price back up. They are getting into overbought territory at the moment. They haven't been overbought since, I don't see an overbought in the past year. Did my chart update? I don't know. There it goes. Yeah, I see maybe one overbought back in 2023. So this is the first time in at least a couple years that they're moving into overbought territory.
I have a question for you when you would like me to ask it.
Go ahead.
So I heard, I forgot which YouTuber was commenting it. It was an economist, and his comment was, "Don't ever sell a stock that's made new highs." And I'm like, huh. Ever is a big word, so I'll remove that. But I think it's not a good idea to sell stocks that have made new highs. And I guess, what's your opinion on that? Did I misunderstand it, not understand it, not appreciate what he said? But have you heard that before? And do you have any comments on that?
Yep, I feel exactly the same way.
Tell me more. Explain it to me.
Okay, so I have before, but I'll do it once more. So I'm going
I'm
to
a
go.
slow study, Daryl. I'm a slow study.
I'm going to go to the charts that I review for my holdings every single morning. It's the first thing that I do at the beginning of every single day. So I don't know which one to actually choose at the moment. Maybe Google will be a good opportunity. So we started off on this run back last year. I was buying pretty heavily in May of last year. And I use chandelier exits to tell me what my exit price should be. And I know when I've explained this before, I had some questions after our live streams that I maybe didn't explain it too terribly well. So I'll try to do a better job here. But I mean, they were getting to all-time highs. If you're selling it here, which I actually did, and I'll show you on a chandelier exit why I did that and how you might adjust your methodology a bit to avoid an intra-week swing. So anyway, I bought them right back not too long afterwards because I realized that I sold early and they took back off again and they ran all the way up. So it's a good idea not to sell at all-time highs. I'm going to go to a simpler chart where I only have the chandelier because I'm working on a video for this. I have data charts for every single day since May of last year, April of last year. And I'm going to put together a time lapse video of how this played out over the past year. So you can watch it in just a few minutes, but you'll be watching a whole year's worth of price action. So I use chandelier exits, and that's basically takes the volatility, the average true range of the price action over a specified number of days. In my case, it's 22 days. I multiply that average true range by 3 typically. And if a stock drops down below that, then I'll consider trimming. Okay, so this is what keeps me in a stock much longer than the average person because they see these all-time highs and they're stepping out.
Mm-hmm.
As long as the price is above my chandelier exit, then I set my orange line on my charts to be the high water mark of that exit point, that chandelier exit. And when it finally drops below that, that's when I start trimming, not at the all-time highs. I'm willing to sacrifice a little bit, 5 or 6%, to not miss the highs, but avoid a big downturn. So I did do some selling once it started dropping below the chandelier exits here, and then started buying in when I saw things turning around right here. So I agree with what he's saying. I don't try to sell at the all-time high because I don't know where
So
that's going to stop.
let me process. You just nailed what I was about to say. So let me just say it. So a stock achieves an all-time high. Don't sell until you have more information to work on, which you later said, which is, well, if it established a new all-time high but began to sell off and it's gotten to a particular risk management level, or maybe a level where you're like, okay, well, I'm going to go ahead and sell. I'm not going to sell because I'm a long-term holder, but okay, that makes sense to me now. Just, when I hear these blanket statements, right, I always think to myself, well, I've sold multiple stocks near their all-time high, sometimes pretty close to their all-time high. And I made out like a bandit, and the stock sold off, and then I came back and bought it again, and I made more money. So
Yeah.
it's like, okay, well, I get that point of view, but I'm going to continue to think for myself and use my methodology that's been working and making me a lot of money. So I'm good with that. Thanks for explaining that. Let's get back on Amazon and kind of close that ticker out.
Okay, so yeah, let me go back to my other charts. Um, so we have a 200-day that looks to be, it actually looks like it's moving up today. That's very good news. We have a 50-day that is still declining. We have a 21-day that has bottomed out and is moving higher and crossed above the 50-day moving average. It looks like they'll probably close above this 200-day. Yeah, and they're trading what I consider their intrinsic value. So I'll be interested to see what you have for a value on them. The last 2 days, let's see, 3 days ago, 2 days ago, they traded right at the 50-day average volume. Yesterday, buyers stepped in with some enthusiasm, and looks like the volume was higher than the 50-day moving average. We talked about the RSI moving into overbought territory. The PPO is positive. we're starting to see some accumulation. Money flow is still negative. Let's just take what we see in a weekly view. Weekly view, they're sitting at an RSI of about 60. So even though they're jumping up in price, if this momentum continues, this is still not a bad place to buy. But I'll look at your valuation and see what you have, because RSI has not even broke above 60 yet. So this still is looking very good to me. Let's see what you have for a valuation.
Okay. Forecasting. It's art and science, because if I just took the trailing 12 months, I would be showing you a stock that's overpriced if I use the trailing 12 months. So I need to take everything into account, right? So we're temporarily seeing a big investment of capital, which is going to dry up free cash flow to take advantage of the AI build out. And it's a timing thing. Like, I'm completely behind Amazon doing it, because if they waited 2 years, the market's gone. Somebody else took those workloads. They can't allow that to happen. They have to invest now. Same thing with semiconductors, right? They're So they continue to grow. That top line growth is so impressive for them to add that kind of. They're adding a business that's the size of, a pretty big, like Uber. Their growth in a year is bigger than all of Uber. So they're adding more than one Uber to the top line every year. That's insane. That's like so impressive. So I need to forecast in a way where I believe this forecast more than the most recent data that's coming through their financials. And that's why I'm going to the 2024 year. The 2024 year had some capital investing, but it was more representative of what Amazon was doing under hey, we continue to grow, but we're not like betting a lot of capital on this big move in AI. So that's the number that I'm going to roll with, and take that number and grow it. And I'm going to grow it by 20%. That's a very high growth rate. But you think about those workloads moving to the AWS business, they're not going to go anywhere. And there's going to be very good margin on those workloads. And you think about people going to Amazon, speaking for myself, I'm not going to stop using Amazon. It's so convenient. You get good pricing, all of the above. So their businesses are just awesome. And they're going to grow cash flows by 20%. And long-term growth is going to be 5%, much higher than other companies, which would be at 4%, because these guys, there's businesses that have a grasp on the future, meaning their businesses are really going to be a part of the future. Amazon, in a way, has the future in a headlock. E-commerce. Who's gonna interrupt Amazon's e-commerce business? The government. That's the only entity that can interrupt it. So Amazon's got to make sure that they continue to treat customers great, which they do, treat their partners and everybody involved great. The AWS business, who's going to interrupt that? I don't think anybody can. They have more competition on the hyperscaler side than their e-commerce business, but they have a headlock on the future. And that's the only company that I've ever used that particular illustration on. They got a lot of cash, but they're going to spend it, and they built out some debt to build out that data center. So these guys are discounted by 14% if I measure the value of their cash flows and the value of their profits. So it's a 12% discount. Now, that's not an overly impressive discount because the stock's been rising. And the second thing I would put in there is this valuation is going to evolve quickly. Like in 2 years, Amazon could be worth another $1 trillion, because we're going to see some of their businesses, like the semiconductor business, the Anthropic, investment's going to be public. Anthropic's going to be a public company within the next 2 years. So a lot of things are going to come into those financials that are going to prop up the fundamentals, and the valuation's going to go up. There's two companies that I think are going to be battling for the number one spot of the most valuable businesses on the exchange: Amazon and Alphabet, Google. Those two businesses have such great position for the future. And so Amazon for me is a big investment. It's a big position in my portfolio. It's an absolute buy because you're buying quality. You're not going to, you know, do 500% return on Amazon the next year. There's other stocks that might do that, but you're taking a big risk. It's very hard to find those, and you might buy, you know, 5 or 10 dogs for every one jewel that you'll find. But Amazon's kind of a pretty good bet. I bought into Amazon at the right time. Now let's go into the time machine. A year ago, I was making similar statements about Google Alphabet, and Google Alphabet was priced about 100% lower. And I really did see that the Google Alphabet business just had these huge advantages. Google Alphabet's my number one stock. It's the biggest position in my portfolio, and it certainly did that. And I think that Amazon is going to head in that direction. I wouldn't be surprised if Amazon's priced 40, 80% higher over the next 2 years. And it'd be a stock that, you know, I don't want to get rid of it. If they want to continue to make their business stronger, better, I want to continue to hang on to Amazon. All right. Any last comments on our friends over at Amazon?
Well, one of the things I see forming on the daily price chart is potentially a cup with handle. You've heard me explain those before.
Yeah, I don't know if I passed the quiz, but
So here's the cup or the base of the cup. And what I would be looking for is a small pullback, maybe to the 200-day moving average, and then a breakout above that rim. Once that fires, then you take the price at the rim, the price at the base, which would be about $57. Add that to this price here, which is close to 240. So you'd get a 297.
Oh, nice.
Short to medium term price target.
20% higher.
Yep.
Okay. All right. Well, I'll drink to that. Let's take a look at the market. Just keep an eye on it. And I appreciate everybody that's on. Very good to see some new names. Looks like Natty, the God. What's up, man? I put ASTS on there. We'll take a glance at it. Not a full valuation. We'll take a glance. And then Big Bear AI. Goodfoot Artists. Good to see some new names out there. And of course, a member of the channel, Ricardo, Microsoft, and Palantir. Let's put our thoughts on two stocks that are inside the fire. Palantir being a more recent kind of stock that's been receiving some downward pressure, and I'll explain what I heard, and it'd be interesting to hear what you guys heard. So I'll add those two to the list, and we'll go from here. All right, so let's turn our attention over to TSM, which is a little related to Amazon, not directly. Of course, Taiwan Semiconductor is the biggest foundry in the world. It's been a great investment. I like this stock. And I bought the stock. I own the stock. I sold the stock. Speaking of all-time highs. And then I thought, whoa, that was a really good decision because it sold off. More recently, I started buying it. Incredible move that happened out of this AI race. So if you bought it at the right time, congratulations. Nicely done. And this stock here is a $1.63 trillion market cap stock, 22 forward PE. It's fairly priced. They announced their growth numbers, and the quarter looked really good. They grew at 36%. They haven't announced their earnings. They're going to announce their earnings in a week. And they did announce kind of like their unit sales. So their unit sales went up 36%. So the volumes went up 36%. So next week, we'll see the financials. Okay, how much money did you make? How much cash? How much this? How much that? And we will definitely review that one. That one, they're in Taiwan, so they're 15 hours ahead of where I'm at. So we get it nice and early. And I think it's on a Thursday that they announced. So that's not a stream day for us, but I'll definitely take a look at that stock and release a video for members. But these guys are growing nicely, and the growth expectations are really good. TSM's basically just riding this AI wave because the semiconductor companies are getting orders from companies like Meta and Anthropic and OpenAI and AWS, Azure, Microsoft, and everybody else. And they're like, man, we're just trying to keep up with demand. 34% growth, 25%, 23%. And they are a big, big company. And these are in the Taiwanese currency. Okay. So it's not like $1 trillion US revenue company. So that's still impressive growth. And their profits are expanding. So that looks good, bringing down their PE ratio. So this one here, TSM is just a terrific business. It's a necessity, and they've made their moat is the fact that if you want the most advanced semiconductors produced, there's one source, TSM, because they have they've developed the process, they have the knowledge that nobody else has, and nobody else can do it. You can't go to Intel and say, oh, we want to use your new foundry. Can you produce our most advanced, smallest chipsets? And the answer is no. Only TSM can produce it. And it's a big advantage. It's pretty much a monopoly for the most advanced semiconductors. NVIDIA, that they use TSM. Broadcom, TSM. Go down the list of these semiconductor stocks that are flourishing. Their source is TSM. And they make good money. They make very good margins. So let me kick it over to Daryl, see what he thinks about TSM, and I'll show you my valuation on TSM. And while Daryl finishes that, looks like Pierre. Good to see you, Pierre. It's been a little while. Great to see you. Cage 860, good morning. Good to see you. Thanks for joining.
So we looking at 5 years worth of data here. We're looking at the bottom of the secular belt bear market in 2022. So we bottomed out in October. So I've connected that point. They've tested a couple times there. They tested in 2025 during the tariff announcements. So then I made a copy of that line and drug it up to connect as many of the high points as I could. And we have one there, 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 and there. And now we're trading right at that at the moment. Made another copy of that, just put it in the middle of that as closely as I could, so we can see where that trend channel middle is. So over the last few years, they've done very well trading within that channel. And then I could pretty easily put the delta bars on there probably for a year in this case, and we could get the slope of that particular line. It's always interesting to see. Then we'll move into just 1 year. And once again, they've done fantastic this year. They have a upward sloping 200-day. The 50-day looks like it declined for a week or so, but it's on an upward slope again. The 5-day moving average is cut right through the 21-day. The 50-day, the 21-day has turned upward and looks to be posing a threat to that upwardly sloping 50-day moving average. We do have an RSI that's above 60, so we're not overbought, but we're bullish. We have a PPO that's in bullish territory. We have accumulation that is moving higher. And we have money flow that is bearish at the moment, but moving into neutral territory. So they're looking pretty good. I noticed the volume's been pretty light most of last week. We did have one above average volume day, but the volume pretty much has been pretty light. We've only had maybe 2 days in the last 7 that were at average volume.
Thank you, sir. So looks like Mike joined. Mike, I put those stocks on the list, and we'll go forward. I think we're gonna have a number of stocks ahead of those because we've got a nice list going. But we will cover those software stocks. Okay, so we covered TSM. BlackBerry made some noise yesterday. They went up quite a bit, and I kind of connected, like, okay, what's their business been doing, and did that move kind of make sense to me, or is it kind of like a unexplained scenario? This stock is really sold off, and 15 excuse me, the 1 year up 15%. But again, we've got this compare of a year ago when stocks were really sold off. So this isn't looking all that great. Now, what I was surprised by was their stock's moving really fast, but it's not really growing. But maybe the forecast is where the money's at. Because I even looked at their financials on their earnings. I just didn't see anything overly exciting. So this is the year we're operating in. They're supposed to grow by 9% and 7%. Their profits are really expanding. But I'm just not seeing why this would be super exciting to me. It's not an overly big company. And they're trying to get away from their legacy business, which was this smartphone market. Of course, the BlackBerry phone was huge 20 years ago. Yeah, about 20 years ago. It was huge. And then Apple showed up and took the market. So I'm just not seeing why this is going to be a great idea, because they don't have something that's super unique to them. They're just trying to compete and be a player in security. I think they want to get into some wearable for the physical AI kind of market. So that might work out for them. But at this point, I just don't see the stock being all that impressive. $47 billion of free cash. Yeah, it's not the right investment for me. I had to look at their financials. So I'm going to stop there on my analysis because I'm just not overly excited. This stock at one time was one of the most valuable companies traded back in 2008. And then Apple took their business. So that's where I'm at with BlackBerry. Is that a stock you want to take a look at?
I can tell you about a documentary movie that I watched on them on Netflix just within the past couple of weeks. I learned that the co-founder They kind of got squeezed out of the company, but he ended up selling all of his shares right here.
That's
He
right.
is secretly one of the most wealthiest people in the world. He's just very quiet and doesn't make the news, but I heard on that documentary that he sold out at the all-time
Hmm.
highs when the company kind of got squished out. So they went from 149 to trading at $3.80 right now. I put this auto support resistance line here. They traded, let me go in. This is looking at 25 years. So they bounced off of that and are moving higher. We kind of have a shooting star candle here, which led me to believe that we'd probably have a down day today, and we are seeing a down day, but it's still early in the trading day. They bounced off the 70 line and drifting a bit lower right now on the RSI. PPO is in positive territory. The accumulation distribution I would characterize as distribution right now. Money flow is currently negative. So I don't know how long this is going to hold. They're already starting to roll over a bit on some of the momentum. So be one to keep an eye on.
Yeah, the other interesting thing about BlackBerry is they're Canadian company, awesome, great, and yeah, it was really interesting how I mean they were the right company at the right time, but at the same time they just didn't see that the iPhone coming, and the iPhone took them out. All right, so let me make a note of the stocks we're going to cover. We're going to cover adding ServiceNow, CRM into it, and then CrowdStrike came up. And I'm going to try to kind of spread the wealth a little bit. I know some of you guys have asked for a couple. So I'll cover one of yours and then kind of do a little round robin and then come back to it. So I'm going to jump into Palantir, which I think Ricardo asked about. And then we're going to go to ASTS. And then we'll go to ASTS and Big Bear AI. And then we'll go to CRM. Then we'll go to CrowdStrike. Then we'll come back to Microsoft, ServiceNow, and then into it. Okay, so what's going on with the market? Just a quick little glance here. So that's about where it was last time I looked. All right, cool. So let's go to Palantir. Palantir, it's an interesting situation because this has been an absolute rock star stock. It's just been a rock star. Everybody wanted a piece of Palantir, but look at that. Down 28%, down 18%, down 14%. And the story that I heard that's affecting Palantir is that Anthropic has been mentioned several times on how powerful their AI models are. I've used Claude and I've used it as the input into my OpenClaw agentic AI platform, and I'm impressed. It's really good. I don't see a big difference because of my usage between Gemini and Claude, but what I do see out of Claude, I'm impressed, and they're also coming out with some other things. The For the military, for the government, Palantir was one of their go-tos, but it's being theorized that hey, now it's really about Anthropic's model, and it's kind of putting Palantir as the second place company, and Anthropic is putting OpenAI. Imagine that in the second place position. Like, hey guys, get out of the way. The best technology is going to go straight to the top. We just talked about BlackBerry and how when the Apple iPhone came out. It's just a device that people liked better. It had better function, easier use. The whole app store started, right? And that might be what our friends at Palantir may be experiencing. It's a maybe there because it's too early to tell. Are they going to bounce back? Are they going to say, hey, we're not going to go away. We're actually coming out with something new and super impressive, and we are going to impress the market? That might be the case. The revenue, now, this is a stock where we have to know what's going on and then form our qualitative, you know, analysis and then form our forecast. Like individually as investors, what do I think Palantir is going to do going forward? They've grown really, really well, really impressive. 70% growth over the last quarter. And that obviously is super impressive. When we look at their forecast, Palantir, let's see here. What are they going to do going forward? They're supposed to can't keep growing. Now, they're not really big. Remember, I was making that comment around Amazon. Amazon's 700 billion. These guys are 7.4. So, yeah, growing at when you're this small, it's very good, but it's kind of okay. That's fine. Anthropic, from what I heard, is already at 30 billion. And Palantir has been around much longer than Anthropic. So I think that's kind of the story that the market's kind of running with. And of course, Palantir is a software company that has this impressive ability to do predictive analysis, large, big data kind of computing. It helps governments do anti-terrorism and so forth. So those things are super impressive. But man, Anthropic's putting a lot of pressure on some really powerful companies. OpenAI, it seemed like OpenAI was going to run away with it 3 years ago. Now OpenAI has like been leapfrogged by Gemini, and they've been leapfrogged by Anthropic. And Palantir may be experiencing some real competition. And it's a competition that's the worst kind for them, which is you are operating with a use case that was you were uniquely qualified to provide that use case. But now somebody else came out with the use case that's better. So it's like, oh, shoot, we got to create a use case that's even better than theirs. If you're able to do that, okay, we got something. If you can't sell this use case anymore because nobody's going to buy it. They're going to kind of spend the kind of money they spend on Palantir. They'd rather buy Anthropic or spend the money on Anthropic and build out the solution, the analytics, the decision streams using the Anthropic, large AI models. So that's what's happening out there. Palantir it's been priced expensively, right? Forward P of 98. It's expensive. It's supposed to be discounted, okay? But from every valuation, Palantir, it's an expensive stock because you expected it to keep growing. But the story's kind of changed, which I think is what the market's trying to determine. Is this going to be real or not? When we look at the software market, it's just getting reduced down to such a small valuation space. And you see how it's software infrastructure, there's Palantir. But you see these stocks just getting murdered. Let's go to the 6 month would be interesting. Oracle down 53%. Microsoft down 20%. Palantir down 31, 32. And let's see if we got these. Yeah. So Intuit down 46%. FICO 45. So the market's like, you know what? This business isn't as good as it used to be because we got this new technology, AI, where we are rethinking how we do things. And Palantir's playing in that big data analytical space. And boy, Anthropic's Claude, they have the data of the internet inside of their large language model. That's almost all the data we have. Of course, there's private data, but that's a lot of data. And I don't know that Palantir has the same thing to fend off Anthropic. That's my analysis qualitatively. Let me kick it over to Daryl, and then we'll come back to my valuation on Anthropic. Palantir.
Mhm. So just to tie this back to Amazon for a second, here's an actual illustration of a cup with handle, and then it fired. So based on that, I had a price target of 207. It did take 5 weeks, but it hit that to the almost to the penny. Well, they don't always work out like that because we have a cup with handle right here as well, and it's failing. So 65% of the time, these tend to work out. So,
And I have a question, comment, conversation piece,
okay.
which is, it's my observation, right? And FYI, I've got a master's in business and an accounting degree, and I loved my statistical courses, loved them, got straight A's. But my observation of technical analysis is the data is going to, in essence, set up particular trends, but a new story, a new paradigm, a new causal event kind of throws away some of those trends. It kind of like interrupts those trends. And the story we're hearing is, hey, Anthropic may disrupt Palantir, which is why this cup and handle didn't work on this occasion.
Yep.
All right, back to you, sir.
One of the things I'm seeing here is sellers are very enthusiastic. So what I mean by that is we have big price action, big price action, big volume, big volume. We are an hour and a half into the trading day. We are already at the 50-day moving average for the entire day. So lots of trading going on with this name right now. The interesting thing that I see is we're forming a hammer. So it looks like there's enough buyers here to absorb these sellers. So I don't know who's selling. I'm not selling. I hold Palantir. I'm not selling. So the institutional,
I'm not selling, but I don't own it, so
yeah.
I don't think I qualify.
So institutional buyers are stepping in today and absorbing this supply. That bodes well for a little bit of a bounce off this price we're seeing today. If I run my cursor all the way over to the left, I can also see that between this price, so 129 up to 138, is where most of the buying, most of the prices, most of the volume has occurred at this price. This gray bar is the longest of all of the price by volume bars that we have here. Most of the buyers are in this price range. That goes back all the way to over here, all the way to right here. So buyers were stepping in at this point. So keep that in mind. We are forming a hammer pattern today. RSI is still declining. We're not oversold yet. PPO is in bearish territory. We are seeing a bit of distribution over the last 3 days. That makes sense. That's 3 days. We're still not too far off the 52-week highs, though. Money flow is currently bearish as well. I'm keeping an eye on this candle today because that's actually a bullish reversal candle. So I think the pricing right around this level, which goes back all the way to May of 2025, is kind of in place right now. So that's my thinking.
Thanks, Daryl. And Palantir is priced too high, in my opinion. 3 months ago, when I didn't hear about Anthropic disrupting them, it was higher growth expectations. But now, once I reduce it just down to great growth, it's just priced too high. And, you know, it'll be interesting when we hear their earnings. I don't know if they're going to be able to speak to the threat from the Anthropic innovation. I think it would be harsher on the stock. If they don't talk about it, the stock's going to sell off because investors will know they got nothing. They have to talk about it. And they have to talk about, this is what we're doing. This is what we're going to do. But if they're like silent about it, I think the informed investor is going to be like, okay, let me sell it. And just once they figure out their strategy and they can tell us this is how we're going to fit into the immediate future, now that everybody loves, Claude and Anthropic, and, Claude and Anthropic are kind of taking OpenAI, ChatGPT, they're taking them out to the cleaners. Like they're taking that user base over. Gemini's doing a nice job of having its place. Meta's coming into the market, and they're going to have a big, AI model. So this space is going to be, these guys are going to beat each other up for a while. So that's Palantir. That is untouchable in my book. Wouldn't buy it, wouldn't hold it. ASTS Space Mobile. This is a request from a new name out there. I'm going to do a quick flyby, but we're not going to do a deep analysis. If you buy a $5 super chat or you become a member, I could do the full analysis like you've been observing, and hopefully you find what I'm going to share with you interesting. So AST Space Mobile, together with its subs, designs, develops constellation of Bluebird satellites. So they're launching satellites up there to provide broadband networks. So the other company that's done this is SpaceX. And it's pretty cool. Communication. And it's a 37 billion market cap company. It is burning a lot of money because it's in the, hey, we got to launch it into space, and then we're going to start collecting some revenue. So 37 billion. So you're paying, 37. So you're paying 500 times sales for this company, a little more than 500 times sales. That's expensive. Now, are they going to be 100 million in revenue, 500 million in revenue? Let's take a look at their forecast. So they're supposed to be a multi-billion-dollar company. Oh, very impressive. So if they hit these numbers, okay, makes sense. So this stock, I think, is rational. Like, hey, if they hit these numbers and they get to this level, they're going to be doing all right, and investors are going to make some money. So good luck with AST. Looks like a really incredible stock, up 854%. And I'm not a big investor in space. I don't know if you are, but a lot of things can go wrong in space, and it's really expensive. And it's just it's not an area that I want to invest in. I'm not completely comfortable with my investment being up in space, flying around, not working, not functioning, having power failures, and then the whole equipment piece goes down. So that's AST. Big Bear AI is a company that focuses on AI, artificial intelligence, decision solutions. So these guys are trying to be a little bit like a Palantir, and providing kind of a platform for AI. This was an early name, by the way. Now you have a $1.6 billion market cap. They don't make money. They've been on a really harsh sell-off. I think it's because their revenue is declining. You're not supposed to be declining. because you have AI expanding, like just becoming a bigger and bigger addressable market, and you're going the other direction, which tells me customers don't like your stuff. They don't like your software. They don't like your service, and they'd rather go buy something else. And that's what's happening there. So the sell off is rational around this stock. When we look at their forecast, nothing exciting there. So this is a name that, for periods of time, it really took off, but the market's not convinced. So that's Big Bear AI. Very good to see a couple new names. Thanks for showing up. Appreciate it. If you want deep analysis, become a member. It'd be great to have you. All right, we're going to move on to, I think we went Palantir, and we're going to go into CRM, Salesforce. Man, Mark Benioff, the founder and CEO, he just doesn't understand why the market believes that this software space is going to be depleted. And FYI, Salesforce, you could say they were early in the AI, idea. 10 years ago, they were selling a solution they called Einstein. And FYI, AI, IBM had Watson. It's not new. It's just didn't take off then. And it was probably because it didn't add enough value. When ChatGPT came out and people got their hands on it and they saw a lot of value. My wife started using ChatGPT. She started, like everything, started going through ChatGPT for her. One of my sons was like, geez, he subscribed to it. And it really just took off at that point. Salesforce, with their solution that they called Einstein way back when, it just didn't take off. Put a period on that. They didn't want to continue with the name, so they rebranded and called it Agent Force. And now they're trying to convince customers that, hey, you can build agentic AI inside of Salesforce using Agent Force, and you can have these agents perform tasks within the Salesforce platform. And that's all rational. It's like all logical. Like, okay, that makes sense. These guys should be doing that. They've been investing in it. They just couldn't get, I guess, enough momentum and share for the market to really be excited about it. They have a really low forward P, 13. Their dividend is becoming interesting, and they're really discounted according to the analysts. Now, even though the market thinks, oh, AI is going to steal your lunch, they are growing, but I would say that they're not growing fast enough, obviously. 9.5% growth. That's pretty decent. The quarter, 12% is far better. Salesforce is going to have to prove, because I think these software stocks are guilty until proven innocent. They don't get the same rights as citizens that are innocent until proven guilty. These stocks are like, okay, can't own them unless they can prove to me that they're going to really just grab this AI era and run with it and create these awesome new revenue streams and so forth. So that's the task. It's a tough one because businesses are pretty slow to adopt AI. There's a lot of apprehension out there. I know that firsthand. I worked with clients trying to get them to use AI, and they will conclude that AI could do so much for our business, but we just don't want to do that right now because we're risk averse. It's so new, nobody wants to do it. It's just fill in the blank. So at some point that's going to change, but I think that's been the reluctance, and it's really causing the slow growth for our friends over at Salesforce. So these guys just closed their year. Good growth, good profit. They've got cash. They also had this idea, which I don't know how far they got, they were going to borrow money to buy back their stock, which when I heard about it like 3-4 months ago, I'm like, that's not a bad idea. But now I'm like, whoa, I hope they didn't do that
That was
because
a dumb idea.
they borrowed money and now their stock's down. So it's like, uh-oh, that's
Yeah,
like, that
dumb
could have been,
idea.
that could have been really, really bad because now you owe the money and your stock is not worth what you bought it. That would be awful.
Yeah,
They have good margins, good profit, good free cash flow. But man, they just cannot get it's like fashion in a way, right? The garment is high quality. It's going to last a long time, but it's a garment that was really in 2 years ago. Everybody wanted that garment. Now nobody wants it. Sorry, but nobody wants to buy it. And their growth projections are not going to they're not exciting enough. And I don't know how they're going to change this. And that's where we're at with CRM. It's a highly discounted stock, but it's become a trap, and it trapped me. I own the stock, so I'm taking my lumps, and I'm surprised. I thought the market would recognize that hey, these guys make a lot of money, they continue to grow, but the market's kind of teaching me a lesson as we go through this sell off that hey, the market just believes this space, it'll never be the same. And these numbers are looking through the lens that we were looking at software companies for the last 10 years. But we're going to see a very different world going forward. I agree with that. Agentic AI is going to change everything. I agree with that. So, what are software companies going to look like in 10 years? I don't know. I think we're going to learn each year how this business is going to evolve, and investors would rather not be in the stock than wait for the definition to be concluded and then Salesforce is a good stock or is a good business. So Salesforce, if they can pull off some really awesome earnings announcements, the stock will begin to work potentially. Or there has to be some type of big event like a black swan event where, let's say, and I don't think it's going to happen, but it's deemed that hey, these AI models are producing so many errors, we can't depend on them. But that hasn't been the case. They do make some errors, but not that much. So that's where I'm at with CRM. It's a space that surprised me. It's cost me money. It is what it is. What do you think, Daryl?
yeah, I've been talking about this one for a while. It's definitely in trouble. So they're testing a support line that we've had in place for quite a while. We had a support line up here that's since turned into resistance. They haven't traded above their 50 days since January. We have downtrends in place, 200 days declining. This 50-day is accelerating. I put out a note in the Discord back in February that one of the things I was seeing, and I'll just read it to you, the small candle body along with high volume was basically telling me that institutions, we're talking big money, are taking the opportunity to unload more shares to retail investors. And I said, be careful on a downturn trend. And we're down 15%. And where could they possibly go? Let's go back to 2022, which I don't know how many software companies you're looking at their charts, but there are a lot of them that are testing this level right now.
Jeez, incredible.
So where could we go? Another 25%, in my opinion. I just looked at a whole bunch of software companies this morning. The software industry overall is still doing somewhat okay. And I'm going to release a video immediately after we're done here on Intuit. So I'm not going to cover the charts for Intuit today because I'm going to go into a lot of detail on what I'm seeing there. But Salesforce is not very far from where Intuit is at the moment. So I think more downside and possibly 124 over the next few months. It seems like every model that gets released is just one more slap in the face for these software companies.
It's eating share. Like it's saying, oh, now this model can do this, now it can do that,
Yeah.
and it's just grabbing share of that addressable market. It's a lot like BlackBerry, right? Like BlackBerry at their height, it was referred to as the crackberry. It had
Yeah.
just such high market share. And then the iPhone came out. At first, there was like, oh, well, iPhone's a toy, BlackBerry's a tool, and business people will not leave their Blackberries. But guess what? Within 5 years, it was like the momentum had swung, and BlackBerry basically went to close to zero. Incredible. All right, so we got a little movement. We've got Oracle's moving higher. That's cool. And Meta's higher. Okay, these guys are still doing their thing. So market's still where it's at. Let's talk about CrowdStrike. CrowdStrike it's done great and it's done horrible over the last 5 years. We had the stock was one of the darlings of, I remember Jim Cramer. This was one of his, oh man, he loved the stock. And then it created a big outage, bam. And then it built its stock price back up. And now it's been under pressure. So, what's going on with the cybersecurity stocks? Why are they down? And look at that. Over the 1 year, it's still not performing well. And that's with the terrible compare. So, forward P is really high at 81. This has always been a stock that was priced high. And I've done multiple videos on CrowdStrike, and it's always looked expensive. It's the expectation that it's going to keep growing fast was there. They told the story that Wall Street wanted to hear, but the story is no longer all that great. The stories that are being told now is how incredible these large language models are now. How, I'm now part of that kind of voice, which is OpenClaw is so freaking incredible. I built something yesterday that I'm creating a video, and it just blows my mind what I'm able to do with it. It's pretty magical. It's like having a genius in these agents because they could see the whole world, the whole data of the world. And then you're working with it, you're instructing it. It's pretty darn incredible. So now if you're saying, well, we do cybersecurity, not very exciting. Because I think at some point these large language models are going to be like, we can build cybersecurity that's far better, because CrowdStrike had this kind of narrow focus where, an Anthropic, OpenAI, Gemini, these models could probably say, okay, we're going to look at threats this way. We're going to monitor it every second, that kind of thing. And it's probably going to, if anything, take away some share from CrowdStrike, or maybe even make them pretty much irrelevant. The revenue has been slowing down. That's a problem. They're not big. 5 billion. I showed Anthropic's at 30. Anthropic didn't exist 5 years ago. Our friends over at Microsoft are 250 billion, 300 billion. Huge. And they're growing at 20%. These guys are growing at 21. You're small. You should be growing fast. So you're not. Okay. That's the first kind of sign that, hey, I'm not not comfortable paying a really high PE ratio and a high valuation for a company that's growing, but they're small. Free cash flow margin is coming down a little bit, although it's good. 27% is good. Looking at their forecast, we do have some analysts that are like, hey, this stock is not everything that people are telling me about the stock. Now they're going to continue to grow, but not this like incredible growth rate. It is a good growth rate. And this is kind of with the lens of AI is not going to be disrupting these guys. Maybe it leaves them alone. Maybe it doesn't. Maybe it doesn't. And who's going to be able to provide cybersecurity going forward? I'm not an expert on cybersecurity, but I would just say that, man, these models are getting so good and they're getting so big and so powerful that the bad guys are probably going to start using Anthropic, OpenAI. In fact, the latest Anthropic model is not released generally because they're afraid the bad actors are going to take it and create, vulnerabilities and hack a lot of computers. That's where you might see the disruption to a stock like this. This is a risky stock. Strategically, it's a risky stock. And when I look at the fundamentals, it's not worth 81. A forward P of 81 it's just too expensive. You're growing at 20% and you're small. That's not an exciting growth rate. If you have access to some stocks like A-Lab is up in different industry, but just to make the point, up 16%, not a bad day, huh? And when you look at these numbers, you're like, that's exciting growth. Okay. So that's exciting growth. And you're paying a P ratio of 60. That's lower than CrowdStrike. So you have choices in the marketplace, and CrowdStrike just is it's not going to do it for me. Let me kick it over to Daryl and see if he could show his analysis, and we'll come back to my valuation on CrowdStrike.
So they fell out of a 3-year trend channel at the beginning of the year and have been declining ever since. These trend channels are pretty powerful. When a company can trade within that this is a short time period compared to what we looked at for Amazon, where it was 20 years. So I'm not as reliant on these shorter term trend channels, but they're still important when they cover multiple years like this. So this was a big warning sign once it started falling out of that trend channel. So we'll just go to 1 year, and they are trading below what was support for a while. They haven't traded back above this bottom one that we've had since they fell below it on January the 8th. They dropped below basically 3 support lines. The 200-day is rolled over, so the downturn is in confirmation at this point. 50-day is declining. The 21-day is moving a little bit higher. The RSI rather made it above 60. Still trading above 60, but it looks like it is less momentum than it was yesterday. I'm seeing volume overall decreasing. PPO is in bullish territory, and distribution is almost at a 52-week low. So that would account for this declining volume. So anyway, yeah, it's not looking good.
And software stocks are not catching any breaks. And this one here, I've always thought CrowdStrike was just an expensive stock, and if it could grow at fantastic rates, like 50%, given their size, yeah, they deserve a really expensive valuation. But even giving them a 36 PE, okay, it's too expensive. So no thanks. I'll invest elsewhere. It's
By the
really.
way, I was covering the completely wrong chart.
Oh, really?
Yes, I was. I apologize. That
Okay.
was Coremetics. Their symbol is very close to one another. The 5-year trend chart was correct. It's when I switched over to the annual view. Nearly everything I said is still in place, however, with the exception of the support resistance lines. They're not there. But the 200 days declining, the 50 days declining, the 21-day was increasing, and now it's declining. We're actually seeing increased volume here. Last 2 days, lots of enthusiasm to get rid of shares. The RSI is at 40. If it drops down below 40, that's not good. PPO is in bearish territory. Money flow is in bearish territory. Accumulation isn't so bad. So please ignore my last comments on the last chart because that was not looking at the right chart. Accumulation is still pretty high on this name. We can see volume actually is increasing here recently, but lots of volatility.
All right. Thanks, Daryl.
By the way, let me show one other thing because I've mentioned a hammer candle a couple of times. This is why they're bearish. You see, after you get that hammer candle, you see the price shoot up. That's pretty typical when you get a pattern that looks like this or a candle that looks like this, that you're going to have this kind of activity. So,
Thank you, sir. All right. So let's talk about Microsoft. Oh, man, this one's such a tough one to call. It's one of the great businesses in the history of the US, and they have some very sticky products. I don't think people are going to stop using Microsoft products, and they have a really strong cloud infrastructure business in Azure. They have a big investment in OpenAI, and all those things. Investors have been selling the stock off. I think it isn't a discounted stock, but it's been interesting to see that the market is saying, Microsoft is not worth having. It's not a stock that the market wants to hold. And it's been surprising. I am an investor in Microsoft. I have a small, medium position, probably about a less than a 1% position in Microsoft, probably about 0.7% position in Microsoft. And I stopped buying shares because I'm like, geez, man, the market's just killing software stocks, including Microsoft, the original software company. And their PE ratio is down to 21. And you look at it and you go, whoa, these guys do everything. They do cybersecurity software. They do desktop applications. They do enterprise. They do business applications. They do database. They do everything. And their cloud business is really booming. They're a $305 billion revenue company growing at 16%. It's awesome. And when we look at their forecast, it's expected they're just going to keep growing, keep getting bigger and bigger. I think they're going to keep growing. And this one here may be the one that, all this bad news just bounces off of them. And they may be in a position to acquire some smaller software companies. But it's going to take some time because the market's doing what it's doing and selling these stocks off. It's going to keep growing its profit. It's going to bring down their PE ratio down to the teens. Oh my God. Incredible. So the surprise and disbelief on Microsoft stock. It's a good, if I look at the fundamentals look fantastic, but the market's doing what it's doing. It's selling off software stocks. And I just can't buy more shares until the market tells me it's time to buy software stocks. So I'm going to I'm going to halt my buying of Microsoft. And that's my analysis there. Let me kick it over to Daryl.
Okay, so I also hold Microsoft. I think my cost is 254 per share, so I'm still in an okay position. I think one of the things that's hurting Microsoft compared to some of the other ones that I think they're in direct competition with as far as the cloud is their software business is based on seats. So if the economy, and there's been a lot of worry about the economic environment, possibly, I mean, we were talking just 2 months ago that we could be moving into a recession. I don't know if economists still believe that or not, but you end up getting layoffs and unemployment rises. That decreases revenues for Microsoft. So I can kind of understand it, but they are definitely being punished compared to some of the other cloud providers. I think their association with OpenAI and their relationship with them is starting to hurt them a little bit from things I've heard. So I still hold them, but they are in a confirmed downtrend now. We have a 200-day that had been increasing, and it is since rolled over. The 50 days started giving us an early warning system right about the end of October when it rolled over and started decreasing. The 21-day crossed below that and has not been above the 50 days since the end of November. So 1, 2, 3, almost 4 months. We have an RSI that's sitting at 38. We were oversold. PPO is in bearish territory, but we did get a signal line crossover on the 6th of April. The 5-day is starting to roll over here, which is not good news. We had a lot of sell-off. We're seeing some accumulation since the end of March, so we're 10 days into April, and the money flow is still pretty bearish. Let me look at the trend chart on this one. So we'll go to Microsoft. Yeah, so what this chart does, this is based on David Keller's work called the Keller model, but it's basically 5 years worth of data. And then he has 1, 2, 3, 4 exponential moving averages. You have a longer one, 34 weeks, then a little bit shorter, 13 and 5, which are pretty customary for looking at shorter term trends. But 13 weeks is about a quarter of the annual calendar. And it just based on the differences between those exponential moving averages. So here's the difference between the longer term 21 and the 34. The 21 has traded now beneath the 34 weeks, so you get histogram bars to the downside, indicating that you have weakening momentum. The medium term looks at the difference between the 5 and 13 week, and we crossed over on about the 17th of November, and we've gotten to some of the worst levels that I've seen over this 5-year period. So this could be like a quarter to 6 months. And then here we're looking at between 1 and 5 weeks. We're looking at the moving averages, exponential moving averages for 1 and 5 weeks. And how are they trading against one another? So the 1 week is below the 5 weeks. So you have some downward pressure in the short term. So I like looking at this one because if you look at just a regular chart, it's hard to predict anything, or not predict, that's the wrong word. It's hard to anticipate anything past a week or two in the market. So this gives me a much bigger view, and why I share this chart in my videos so often, because this clearly shows that Microsoft is suffering. We're talking almost a year out here, and it's going to take them a long time to recover back. So anyway, that's why I like this chart so much. It's more of a big picture, not a 1 or 2 week view. A lot of people that look at charts get accused of being short term. This is a long term chart, and I use these just as frequently as I use my daily charts.
Thanks, Daryl. So we're going to turn our attention over to ServiceNow, and this is one more software stocks that's just been hammered, down 50%. It's down 8.6% today. It's brought down its PE ratio to 21.5. And ServiceNow is one of the first companies 3 years ago. They were like, we're all in on AI. They have a very strong agentic AI platform within ServiceNow. It's real. It's really much, it's got everything that you want from a business perspective. But as I mentioned, I've observed the businesses are not quite ready to start using agentic AI. And I think that the company is not seeing the growth that they would want to see. Their growth is kind of slowing down. Now they're getting bigger, so that explains why we're seeing a lowering of percentages. But if you're dealing with such a big event of AI, basically redefining how we run businesses and so forth, and it is allocating massive amounts of capital, you should be growing a lot faster. You should be growing much faster if you're going to jump on that wave, and it's not there. So that's the big worry is, yeah, the numbers look good, but at some point they may fall, the bottom may fall out of these numbers, and then you're left with a software stock that's not very desirable, and investors don't want to be in it. It's bringing down the discounts, and this is a discounted stock. I'm going to be a broken record, but either the market's going to be right or they're going to be wrong, or there's going to be a variation of that, stock by stock. But right now, the market in general is saying ServiceNow is not worth the risk, and it's selling it off. What do you think of ServiceNow?
Yeah, it's painful looking chart. So they're breaking down below a couple support resistance lines we had. They didn't quite reach this back in February, but they blew right through it. They came down and traded right at it yesterday, and they're blowing to the downside here. So we'll use the same analysis that we used prior, because there are some software companies that are trading down to their October lows. So you're looking at about 67.40 on this one.
Jeez.
So you probably have about another 20%. And I've seen enough of the software charts to think that is probably it's a probability over 50%, in my opinion. Look at this volume. Wow. There are people getting out of this big time right now.
Running for the exits.
Yep. We're at, let's see, 11:45 Eastern time. So we're only halfway through the trading day, and the volume is probably 40% higher than is typical for the full day. Yesterday was probably 2x, 30 million were traded. 20 million is the 50-day moving average. We have a 200-day that's declining, this trend line. The 200 days basically following that trend line. We have a 50-day that rolled over and it's picking up steam. 21 days picking up steam to the downside. RSI is overbought. Last time that happened, we pretty much stayed oversold, rather. I said overbought, I meant oversold. We stayed oversold for 23 trading days. Looks like accumulation distribution is at a 52-week low. Money flow is negative. So I think you have about 25% more downside on this one based on the chart.
All right. Well, it's Friday, and we had a good week for stocks. So we're going to come back to that, but let me just get rid of the bad news altogether, and then we'll come back to this, what I hope to be positive ending, which is Intuit. And I'll give you a quick little personal story on my Intuit exercise on TurboTax. So did my taxes, and there was one, I sold some stock, and there was some confusion around how I was supposed to report it. And so I used the Intuit help screens, right? And it was supposed to be kind of an AI kind of chatbot, and it wasn't getting the job done. So I opened up Gemini, said, I'm in TurboTax, and this is what I'm trying to do. Gemini nailed it. And it was a negative experience with Intuit, which is it's your darn software. Why is an external AI chatbot able to give me better information and nail the problem and nail the solution? Literally, Gemini walked me through the screens. It's like Intuit, guys, like who's running development over at Intuit? That's like low-hanging fruit. You should have nailed that. You should have made that experience kind of like, man, I'm looking forward to the next problem I have with the software, because it's such a cool exercise to find the information that I need to find, my solution. And there was nothing wrong with the software. Gemini got me to the right screens, and I entered my data. Voila, my taxes are done. But that was a bad report card or bad impression on Intuit. They're not there. So kind of left a bad taste on my mouth. I have looked into their QuickBooks business. They have an agentic AI platform, but I think right now it's a big marketing exercise. How many people use it? What's the adoption rate and so forth? That's going to be interesting. And this stock is just getting murdered. It's like, geez. Oh my God. This is such a historic company. I love the story behind this company. The founder ran out of money. He told the employees, look, I'm going to give you more stock. Please hang on. And those employees that hung on, they became really wealthy. And, but right now, geez, it's getting hammered. This is such a great business historically. And it continues to grow. It's a pretty good size outfit, 20 billion in specific 3 categories of business. But it doesn't matter. Software stocks are just not what the market wants to hold. Stock after stock, I cannot buy anymore. I sold some shares of software stocks. I actually was contemplating, do I sell the Microsoft position? And I don't want to do that just yet. It's a small position. I have been selling shares of other stocks. The next one that I think I'm going to sell is going to be Adobe. I think Adobe's not it's not their fault directly, but it is, which is they just didn't see how AI was going to be this monster of of a innovation curve, and they just don't have anything. So I know you didn't want to share charts on Intuit, so I'll keep it there.
I'll post the video right after this one. Probably within 30 minutes after we're done, I'll have a video posted on Into It where I
Oh
cover
man,
it in detail.
there you go. The setup for the release, the premiere of the charts.
Dun, 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 dun.
Awesome. All right. So it's been a good week, everybody. Let's not let that software space affect our psyche, because look at that. 1 week, we we see some stocks moving, and this is these are good holdings here for me. See how Microsoft, it's just so incredible that Microsoft is not the place where investors are going. But like, we're not going to, I'm going to be a broken record, but I'm going to spare you any more comments there. The semiconductor space, great place to be for the past week. Look at that green. The industrials and the right industrials. United Health was a good place to be. And energy pulled back. And I've been buying into energy every time it sells off, and I'm going to do that today until it proves to me that this darn oil market is gonna come down. Because look at that, oil prices are higher, but oil stocks are selling off. Well, my first job out of college is working for a big oil company doing accounting. So I know that the oil companies are going to make a lot of money. Their earnings calls are going to be very positive. So if oil is above probably $80 a barrel, I'm going to keep buying because it's my insurance policy. I don't own like oil. I think it's less than 6% of my portfolio. It's probably 5%. Um, so it's not like it's not going to move my portfolio a whole lot, but it's just a small insurance. It's a small hedge. If if oil companies fall because oil prices fall, the rest of my portfolio is going to do better, and vice versa. If oil prices go up, the investments in oil stocks are going to do well, and it's going to lessen the loss on the rest of my portfolio. So that's where I'm at. So that's it. You talked about that video that you're going to release momentarily. Anything else going on with your channel?
I released several videos this week. Um, in fact, I don't have them prepared to share like I normally do. I was doing the Into It video this morning before we started. So
No
let me just
worries.
tell you which ones that I have. I have Lowe's and Home Depot. That was requested, and then Into It was requested. So that's why I did that one this morning. So if
Great.
you're interested in Home Depot or Lowe's, those videos are out there. I also wouldn't mind sharing my screen for NVIDIA just to give everyone a heads up. I think this is getting ready to break out again. So I've showed charts in the past about the NVIDIA breakouts, and when they do, they run pretty quickly. This one ran up and then actually failed, but we are right at that breakout level again. So I'm going to be watching this one very closely. We have a 50-day above the 200. The 21-day is below both of those moving averages, but is turned upward. That's trading above all of the averages. The volume is a little light. That's a bit concerning, but we're running up to the 60 line at the moment. So when you see these getting to the 60, if it quickly runs up to the 70 or gets overbought, I mean, you're looking at about a 15 to 20% gain. So if you own NVIDIA and you're wondering if it could go higher, in my opinion, it probably can run up another 15% over the next few weeks.
Well,
I've been adding shares to NVIDIA.
it's having a good day today.
Yep.
So, perfect. So that's it, guys. Thanks for tuning in. We just went about 2 hours and covered a lot of stocks. We really appreciate you tuning in. Next week, get plenty of rest this weekend, because next week we are going to start earnings. It's going to get busy, and we're going to stay busy for 6 to 8 weeks. And I hope that Daryl and I could do some watch parties. That's what I think is really fun. And we'll organize some watch parties. And hopefully you can tune in the morning, Monday, Wednesdays, Fridays, to get our thoughts on the market, review some stocks. But I also hope you can tune in for the watch parties that we're going to host. And that's it for now. Everybody, enjoy your weekend, and we will catch you on the next stream.
Take care, everyone. Have a good one.